Members, good morning. This is the appointed time. We have a quorum. I call this meeting to order. Item 1. Information papers issued since the meeting on the 5th of June, 2023. The panel has received 2 papers. You will find the details on the agenda. Any questions? No? All right. Next, date of next meeting and items for discussion. The next regular meeting will be held at 10:45 a.m. on the 9th of October. The administration has proposed to discuss 2 items. Just 1 item. Enhancements to the Deposit Protection Scheme. Any other suggestions? If not, so be it. 1 item for next meeting. Enhancements to the DPS. Item 3, company re-domiciliation regime. Let me welcome the Secretary and his team to our meeting. With us today, we have Mr. Christopher Hui, Secretary for Financial Services and the Treasury, and also representatives from the Company Registry and the Inland Revenue Department. Chris, Secretary, would you like to walk us through this topic? Good morning. The government announced in February this year, in the 2023-24 budget, the introduction of a company re-domiciliation mechanism to facilitate non-Hong Kong companies to re-domicile in Hong Kong so they may leverage on our favorable business environment and professional services. In 2021, we introduced fund re-domiciliation mechanism for open-ended fund companies and limited partnership funds. Since then, foreign funds have re-domiciled to Hong Kong under the mechanisms. With reference to the positive experience gained therefrom and responding to the sector's demand, we believe it is an opportune time to put in place a company re-domiciliation mechanism which has wide applicability. At present, Hong Kong does not have a company re-domiciliation regime. Non-Hong Kong companies intended to re-domicile to Hong Kong have to be wound up or undergo a court-sanctioned scheme of arrangements. These are complex and costly legal procedures which do not allow the companies to preserve their legal identities and operational continuity, nor do they eliminate the possibilities of subjecting the companies to 2 sets of regulations in 2 jurisdictions. We propose to introduce a company re-domiciliation regime for non-Hong Kong companies to be re-domiciled to Hong Kong seamlessly without the need for complicated and costly winding up or court procedures. The legal identities as body corporates, contracts entered into, property, rights, obligations, liabilities will not be affected. To allow more companies to benefit from the regime, we will in principle expand as far as possible the scope of application. That means we will not impose any economic substance test on the applying companies. Holding companies or companies which have not set up a major presence in Hong Kong at present can develop their business here under the mechanism. Attracting companies to re-domicile to Hong Kong will not only bring greater demand for Hong Kong's professional services such as accounting and legal services, but also create more investment and skilled job opportunities as the re-domiciled companies may move their business operations to Hong Kong. For non-Hong Kong companies which are already economically active in Hong Kong, their re-domiciliation will facilitate the compliance with our high standards on corporate governance and avoid being subject to 2 sets of regulations in 2 jurisdictions. The Registrar of Companies will be empowered to process applications. Upon successful application, the company's registry will issue a certificate of re-domiciliation, and the re-domiciliation will take effect on the same day. The company must deregister in its original domicile within 60 days, or its registration in Hong Kong will be revoked. The re-domiciliation process should not affect a company's tax obligation to its originating jurisdiction. Nevertheless, we will expressly provide for the re-domiciled company's tax liabilities and empower the Director of Inland Revenue to address transitional tax matters. Between March and May this year, we conducted a public consultation exercise and reached out to the various business and professional stakeholders. The sectors gave a positive feedback, and we thank stakeholders for their pragmatic suggestions on the details of implementation. The insurance sector has expressed a strong demand for the proposed regime. Therefore, it is our goal to establish an open and simple re-domiciliation mechanism as quickly as possible so that these companies may be re-domiciled to Hong Kong. We're studying the views collected during the public consultation exercise with the financial regulators and preparing legislative proposals. Our target is to table the bill into the Council in the first half of 2024. With these remarks, I welcome questions and comments from members. Thank you, Secretary. The floor is now open. Let me read out the names of members who would like to ask questions. Dr. Johnny Ng, Mr. Jan Pui Leung, Ronick Chan, Rock Chan, Robert Lee, Deputy Chair, Dr. Wendy Hong, Chen Kin Po, Dr. So Chung Ming. Each member will have 4 minutes, questions and answers included. Dr. Johnny Ng will kick us off. Thank you. The company re-domiciliation regime is very beneficial for the sector, and I have some questions. I understand from the paper that the legislative proposals will not be submitted until the first half of 2024. So when exactly will the regime be implemented? As Hong Kong is trawling for talents and enterprises, there is a keen demand. I hope that we can work on it as quickly as possible. Second, after enacting legislation, will there be resources allocated to external publicity to attract more non-Hong Kong companies to be re-domiciled to Hong Kong so as to create jobs? Do you have KPIs as to the number of companies to be attracted to re-domicile to Hong Kong? Third question about integrity under the application eligibility. It is said that the re-domiciled company will not be used for unlawful purposes contrary to public interest or endangering national security. Can you give me more details? Say, will you provide a list of activities involved so as to address the concerns of companies intended to be re-domiciled to Hong Kong? Let me take the first 2 questions, and then I would defer to my colleague to give you more details about the actual implementation. First, the timetable. We'd like to implement the regime as quickly as possible as well. As mentioned by the CE and the FS, we must do our level best to boost the economy, and that is why we propose to introduce this regime. And we seek to consult this panel today at this early stage so that we can work on it as quickly as possible. Apart from legislation, we also need to have other preparation work. We are aware of the time-sensitive nature of the proposal. Our target is to submit the bill into the Council in the first half of next year so that with members' support we can then proceed to some preparations for its actual implementation. About promoting this regime to the sector and the wider public, we do have a mechanism to liaise with the sectors, say through the Invest Hong Kong, through the companies registry, as well as liaising with professional bodies such as the legal and the accountancy professions, so that once the law is passed, it can be implemented as quickly as possible. In fact, this is not a novel concept. As I mentioned in my opening remarks, we already have a fund re-domiciliation mechanism for certain funds. We also briefed the intermediaries and other stakeholders on the regime. So we'll follow up on publicity after the law has been passed. On the third question, member asked for the details, and I'll defer to the Registrar of Companies to take this question about companies not running contrary to public interest or endangering national security. According to the company's ordinance, all companies incorporated in Hong Kong must abide by the relevant requirement, and that is the company must not be incorporated for any unlawful purpose. This is not something new. And we have a mechanism under which we will review all the information submitted to support the application, and if need be, we'll also consult other government departments. Mr. Chan Pui Leung. Thank you, Chairman. I welcome the introduction of the company re-domiciliation mechanism to attract more non-Hong Kong companies to re-domicile to Hong Kong, especially for insurance companies. In the past, these insurers are domiciled in the Bermuda area. This is for historical reasons. Now that we no longer have the inheritance tax, we are still not able to attract them to come back. And we have 10 such companies which have not been re-domiciled to Hong Kong. Now, with resumption of normal travel with the world, these companies have a clientele mostly in the mainland. I know that there is a keen demand from them. So introducing this company re-domiciliation regime will, to a large extent, help attract these insurance companies to come. Now, many of these life insurance companies intend to be re-domiciled to Hong Kong. And in that sense, do you have any policy measures to expedite the re-domiciliation process? Secretary. Thank you. As Mr. Chen puts it, we very much agree that in the past few months we have been liaising with the sector on the proposed arrangements. The insurance sector is one of the sectors which have expressed strong interest in this regime. We've also collected views in different areas. For example, clear and simple procedures should be provided to facilitate their re-domiciliation. In the public consultation exercise, we set out the application eligibility and requirements, as you can see in Annex 1. This is to provide clarity. When we consulted the sector, we provided them with a lot of details, and in return, they have given us a lot of food for thought for us to enhance the arrangements. We also received comments, for example, in relation to a special resolution to be supported by members about the re-domiciliation decision, and then there is a 21-day notice. The sector has proposed relaxing the 21-day requirement. We find this suggestion feasible. We've conducted extensive consultation, and in the light of requests put forward by different sectors, as long as the mechanism can be maintained in principle, we will do our best to give administrative support to their suggestions. The second point is we'd like to publicize this regime to different enterprises and organizations. We need to facilitate their re-domiciliation. We also need to publicize the regime. So through Invest Hong Kong and the company's registry, we will be keeping a close liaison with the professions and stakeholders so that once this regime is implemented, the companies can be re-domiciled as quickly as possible.
Next, Mr. Ronick Chan. Thank you, Chairman. I support the introduction of company re-domiciliation regime to provide more flexibility so that eligible overseas companies who would like to move to Hong Kong can do so more easily. Now, several technical questions. Now, during the re-domiciliation process, the most important thing is to clear up tax matters. Now, the registrar of companies will be empowered to handle the application, so that's not very difficult. On the other hand, transitional tax matters would be dealt with by the IRD. Now, our law sets out clearly the procedures and arrangements for transitional tax matters. But why, on this occasion, we are doing so by empowering the registrar rather than legislating for the handling of re-domiciliation matters? Now, if the originating place of the companies have not specified otherwise, then two requirements would apply. First, 75% of members at the annual general meeting have to pass the proposal, and also there has to be a 21-day prior notice. Now, it seems foolproof because an AGM is involved. However, since there is no legislative requirements in the originating place, it may be subject to legal challenge. So maybe we should require a full approval from all members to avoid any disputes. So on this matter, have you referred to the experience of other jurisdictions? We want to prevent disputes arising from the decision between members. I will invite the registrar of companies to take the second question, and the Deputy Commissioner of the IRD to take the first question. Thank you, member, for your question. Now, we propose a 75% approval and also a 21-day notice in advance. Now, when there are no legislation on the matter as the originating place, then we would follow the company's ordinance requiring a 75% approval of the AGM for the decision to be made. And also for a special resolution, a 21-day notification in advance is required. On whether we should make the requirements more stringent, we have heard other views. So we are thinking that as long as the shareholders or the company has complied with the requirements of the originating place, then the decision would be deemed valid. This is our direction. Benjamin, thank you. On Mr. Ronick Chan's question, we will follow the established practice. That is, the provisions on transitional tax matters would be provided for under the Inland Revenue Ordinance. We won't empower the Commissioner for Inland Revenue to vet various applications. Now, to provide more clarity to those eligible companies, would you consider extracting all the provisions under the company's ordinance and put them under a separate section to make it clearer? Benjamin? Now, for those transitional tax provisions, we will put them separately. We want the eligible companies to know if they choose to re-domicile in Hong Kong, how will the transitional tax matters be dealt with. Mr. Rockchen, I support simplifying the company re-domiciliation system. Two questions. Paragraph 12. Now, after the issuance of the certificates of re-domiciliation. Within 60 days, the company shall notify the registrar of companies of its deregistration in its original domicile. Now, I've done some research. It is in line with the Singaporean requirements. However, taxation matters are more complicated. Maybe it will take longer than 60 days to clarify the method up. Now, maybe there will be flexibility, but in setting the 60-day requirements, can you offer more flexibility, say, for example, 90 days, which is more flexible than our competitor? This would be a more favorable treatment for them. Now, paragraph 15, the Secretary also said that the insurance sector has a lot of aspiration for this system. Now, for capital insurers or captive insurers, their operating cost is very low. However, the cost for re-domiciliation is high. Now, besides simplifying the mechanism for captive insurers, will there be other facilitation measures to help them cut costs so that they can re-domicile in Hong Kong more easily? Secretary, I will answer the first question, and then I will invite supplements from my team. Now, as the member mentioned, yes, we can offer a period longer than 60 days. Registrar, please. Thank you. In considering the time requirements, we have made reference to other jurisdictions. Now, during the 60 days, the company will have registered in Hong Kong, and the original registration as the originating place has not been deregistered. So during that period, there will be registration on both places. Now, during consultation, we were asked why we didn't issue the certificates of re-domiciliation only after the deregistration is completed. Now, we would like to strike a balance. For some registrations, they would require the company to produce a certificate of re-domiciliation in order for their original registration to be deregistered. So this is our consideration. I think this is a very pertinent question. We can't bring inconvenience to the companies. Now, if we cause inconvenience to companies during the deregistration process, this is not something we want to see. We want the re-domiciliation process to be pain-free. So we invite the Secretary to revisit these requirements. You have to let the companies know that there is a flexibility beyond the 60-day period. Chairman, we intend to specify clearly that the time requirement is 60 days. However, for any valid reasons, we can extend the period. Thank you. Mr. Robert Lee, Deputy Chairman. Sorry, Chairman, can I invite the Secretary to answer my question on captive insurers? Yes, cost is an issue. There are two areas. First, there may be double taxation risk after re-domiciliation. So we will propose amendments to the Inland Revenue Ordinance to avoid double taxation for re-domiciled companies. Another area about the development of the insurance company and providing more facilitation or convenience to eligible companies. Now, we are looking not just at the insurance sector. This re-domiciliation regime is important for the entire financial service sector. Now, we have made relevant legislative amendments to make the registration of captive insurer business more convenient. So to address the risk of double taxation, we will handle it through the special measure. Mr. Robert Lee, thank you. I support the company re-domiciliation regime. I believe it will help Hong Kong attract more businesses and corporates to come and enhance the demand for our professional services. And also we have many open-ended fund companies and limited partnership funds which are attracted to Hong Kong after the relevant re-domiciliation mechanisms were established. So in terms of our competitiveness, how will the government make the regime more attractive? Now, concerning public inspection on the name of directors and so on, some jurisdictions have imposed restriction on the inspection of register. And also, they impose a more lenient requirements on reporting. Now, some jurisdictions have a more stringent requirement or restriction on registry inspection. Some do not. So how can we ensure that our mechanism is competitive? Now, in order to attract companies to move to Hong Kong, there should be financial incentives. For example, exemption of fees for the first year, now, so that they may come to Hong Kong more easily. So how can we provide financial incentives to attract businesses to come? Secretary, on the first question, how our mechanism is different from other jurisdictions. Now, Mr. Robert Lee mentioned about disclosure requirements. Now, in terms of the eligibility for companies, as I said, we haven't imposed any any economic substance tests for companies. In other places like Singapore, companies are required to fulfill thresholds like total assets value, annual revenue, and number of employees. Now, we strive to attract companies of different scales to re-domicile in Hong Kong. So in designing the framework, we have considered how our mechanism compare with other jurisdictions to provide more convenience to potential companies. Now, we have consulted the last Legislative Council and the public widely on disclosure of addresses of directors and also other information available for public inspection. We have enhanced the mechanism significantly. Now, that enhancements was implemented in phases. We implemented the enhanced regime on new types of documents, and then we are gradually extending the enhanced regime to other documents. Now, under the leadership of the registrar, we have been taking forward the enhancements gradually. Now, on the third area, about financial incentives for attracting companies to Hong Kong. Now, from a development perspective, we haven't considered offering financial incentives to attract companies to come. We want to leverage on our inherent strengths to attract companies to come. Now, on double taxation issues, we would offer an arrangement to avoid double taxations for some companies. Now, we think macro facilitation measures helping the trade would be more pragmatic.
Dr. Wendy Hong. Thank you, Chairman. I support introducing the company re-domiciliation regime to Hong Kong so that these companies may utilize our simple regime, an open regime. Now, the Secretary just now mentioned the nitty-gritty. I think this is in line with our strategy of trawling for enterprises and talents. This will help enhance our competitiveness. I have a number of questions. First, on footnote 4, Singapore requires that the companies should meet the special thresholds in respect of the total asset value, annual revenue, and the number of employees. And the Secretary just explained that in order to extend the application to a wider scope of companies of different types, the government will not introduce an economic substance test. But I do think we can draw reference from the Singapore model to have some kind of economic substance test. We can have a two-tier system. For example, for the first tier, the companies can be spared the economic substance test as set out in the paper. And then for the second tier, for companies intended to be re-domiciled in Hong Kong, if they employ a certain number of employees and have substantial economic activities in Hong Kong, concessions can be provided to these companies so that they make more contribution to our economy, benefiting the population. Now, second question relates to paragraph 12. Within 60 days after the issuance of the certificate of re-domiciliation, the company shall notify the registrar of companies of its deregistration in its original domicile, failing which its registration in Hong Kong will be revoked. But I would say if the company is really unable to provide the evidence of deregistration with its original domicile, the registration in Hong Kong will then be revoked. Now, will you put the company concerned between the rock and a hard place? Because it has filed for deregistration, whilst the registration in Hong Kong is revoked. And then, according to the paper, %75% of voting members should endorse the special resolution authorizing the re-domiciliation. This is a requirement. Is this high or low threshold comparing to other jurisdictions? Let me take the first questions, and then the registrar can take the other two questions. About the economic substance test, we looked at not only Singapore but also Australia and New Zealand. So it's not the case that we should mirror any place's system. We should have regard to our own circumstances and our advantages. As explained, we'd like to provide facilitation for non-Hong Kong companies to be re-domiciled to Hong Kong. And with all the supporting documentation ready, the application should be approved in 14 days. I believe this will be very conducive to facilitating re-domiciliation by non-Hong Kong companies. So that is the design of our system. We seek to provide facilitation for the enterprises. Second question about the 60 days notice period, I'll defer to the Registrar of Companies. Thank you, Chairman, and thank you, Member, for the question. About the period of 60 days in which the company must notify us of the deregistration in the original domicile. As mentioned in the previous answer, within 60 days, if the company is unable to complete the deregistration in the original domicile, the company can inform us, citing the reason, and if the ground is justified, we will consider extending this period. Let's say after extension for various reasons, or if the company has not applied for an extension, then at the lapse of 60 days, if the company is unable to show proof of the registration at the original domicile, we will be revoking the registration of that company in Hong Kong to the effect that upon the expiry of the 60 days, the company has not registered as a company in Hong Kong. As for the contracts and other documents concerned, they remain binding. That means we will also expressly provide that they will be exempt from the liabilities concerned. About the 75% supporting the special resolution and the 21-day notice in Annex 1, well, I think you've answered that question before. You don't need to repeat about the 60-day period. I think you've also answered that as well. No need to repeat. Thank you. Next. Mr. Chan Kin Po. Thank you, Chairman. Of course, I support this legislative enactment proposal to introduce a company re-domiciliation regime. The insurance sector should be your target. Have you fully consulted the sector? I mean, after you've collected views from the insurance sector, you need to make sure that all obstacles will be removed. The companies intended to be re-domiciled will not be subject to any hardship from the original domicile. Now, because you take a result-oriented approach. Now, comparing to our major competitors such as Singapore, is our proposal competitive? Is there any further room to optimize the proposal? About captive insurance. Now, Singapore takes up a larger market share of captive insurance in the world comparing to us, mostly because they have the system of having managers in the captive insurance business. So do give it a thought, but please answer my first two questions. Thank you, Mr. Chan. He is concerned about his sector. We are also concerned about the insurance sector. Now, we met with the Federation of Hong Kong Insurers and the industry, and the sector, to tap their views. They similarly expressed the wish to see early implementation of the regime, and that we should have communication with the releasing domiciles such as Bermuda. In fact, we have started work in this regard. We have briefed them on the proposed re-domiciliation regime. And on a larger scale, we think about how we can provide more facilitation for the sector, including captive insurance. After the meeting, we can discuss with Mr. Chan. This is a general company re-domiciliation regime covering different company types and companies from different sectors. So for matters specific to the insurance industry, we can further discuss the matter after the meeting. The third question is on comparing ourselves with other jurisdictions. At the macro level, this company re-domiciliation regime is timely. It's a timely regime because we have the push and pull factors. Some say insurers have been registered in other jurisdictions and they are facing more and more stringent requirements. And with the BEPS package and global minimum tax rate coming on stream, many companies will need to save operating costs as well. So these are push factors. We need to provide an avenue for companies to re-domicile to Hong Kong. As for the pull factors, internally, we consider our own advantages and the facilitation measures. For example, our approach is different from Singapore. We do not have the economic substance test, no requirement on asset size, and then the registrar of companies will provide a reply within 14 days. Now, for the 21-day notice, again, we take into account views of the sector and relax the requirement when appropriate. Next, Dr. So Chung Wing. Thank you, Chairman. I agree with what is set out in the paper. That is, the company re-domiciliation regime will bring a lot of benefits to Hong Kong. I support this proposal. I have 2 questions for the administration. First, from the paper, I read that the administration does not intend to mandate an economic substance test for companies intended to be re-domiciled. With globalization and work processes going online, the companies may have had a lot of dealings in the original domicile beyond the imagination of this government. So, whilst you're providing facilitation for non-Hong Kong companies to re-domicile to Hong Kong, are there measures to make sure that there is proper supervision and monitoring to ensure market robustness? The fund re-domiciliation mechanisms for open-ended fund companies and limited partnership funds have taken effect for more than a year. Has the government drawn on this experience, especially in formulating the proposals for company re-domiciliation? In the light of the fund re-domiciliation mechanism, what facilitation measures can be provided? Secretary. To answer the 2 questions put by Dr. So, let me first answer this question on application eligibility and requirement. That is in paragraph 8. There are some general requirements. For example, the company should abide by the relevant company registry's requirement about insolvency and integrity member and creditor protection. We have a set of rules to govern these matters. Only companies meeting the criteria and standards will be allowed to re-domicile to Hong Kong. So to reassure Dr. So, we do have a set of criteria put in place. These companies must meet the requirements. About supervision against facilitation, we mentioned in our reply just now, for example, G2 in Annex 1, about members being given at least 21 days notice, and also Annex 2, Item E, the company should provide the latest audited financial statements within 3 days prior to the date of application. Now, having listened to the stakeholders' views, we will consider relaxing the requirements so as to make it more convenient for companies to apply for re-domiciliation. To answer members' question, I'd say that we have put forward some very clear requirements for compliance. And also, without compromising the system or the regime, we will provide a further facilitation. Next, Mr. Edmund Wong. Thank you, Chairman. I speak in support of the company re-domiciliation regime, Chairman. As set out in the paper, this will help promote our professional services. The FSTB also consulted our profession. We have companies in BVI's, Cayman Islands. In the past, economic substance reportings have been put in place, and in the second half of the year, they will be required to file financial statements. In terms of compliance and reporting requirements, the regimes in these islands have been brought on a par with other jurisdictions. I thank the administration for the support. Now, about balancing charge, balancing credit. In the past, the IRD would grant a cut-off for re-domiciled companies. What about the assets still owned by the company after the cut-off? Or if the company did not claim credit for the asset and rather treat it as a bad debt, how should it be dealt with? Well, the profits are already the business received is already chargeable to profits tax. But how do we deal with that? About auditors' powers and responsibilities. Section 417 and 425 under the company's ordinance, it is provided that if you want to switch to another auditor, then if there is a problem with the existing auditor, a members' meeting can be held to inform shareholders of the auditor's problems. Now, if the auditors are based outside the jurisdiction, then nobody in Hong Kong will know about these problems within the re-domiciled company. And about the 21-day notice, for special resolution, a 21-day notice should be provided. Now, for company's ordinance, for AGM, you need a 21-day notice, whereas for special resolution or special general meeting, a 14-day notice is usually required. This may be a new requirement. This is a major decision. In the company's ordinance, there is a special notice requiring 28 days notice. That is for major decisions such as removing a director or a shareholder. Now, if these major decisions require 28 days notice, why is it for re-domiciliation it requires 21 days?
Benjamin will take the first question, and then the registrar will take the second and third questions. Thank you, Chairman and Mr. Wong. Now about the tax discount. Now, no matter whether a company is registered in Hong Kong, as long as it is deriving profits in Hong Kong, it is subject to profits tax. Now, for a re-domiciled company, if it has been operating a business in Hong Kong, it will not affect the tax treatment after re-domiciliation. Now, before re-domiciliation, some companies may not have a business in Hong Kong. After re-domiciliation, they are going to establish a business in Hong Kong. So on the date of re-domiciliation, they may be in possession of machineries and capital assets. So we have to consider when these capital investments and machineries are put into use to generate a profit, how will they be taxed? So we will specify clearly in the ordinance how we are going to calculate the value to be derived from the machinery. Now, as per usual practice, it would be determined on the face value of the machinery on the date in question. That is the usual practice. Now, after re-domiciliation, some bad debts may be incurred on businesses in other places. Now, before re-domiciliation, these bad debts were not subject to taxation in Hong Kong. As a result, the bad debts will not be subject to a tax deduction in Hong Kong. So this is what we are going to deal with in the legislative amendments to the IR ordinance. Sorry, what about my question for the company's registry? Please be brief, Registrar. I have been very lenient in dealing with time. We are already overrunning. And just now, another member has come in and pressed the button. So after Dr. Kennedy Wong and Mr. Duncan Chiu have spoken, I will draw a line. There will not be a second round. Secretary, please give us a brief answer. or registrar. Thank you. About the 21-day notification period, I have answered it before, so I'm not going to repeat it. About auditors' responsibility and powers, we have received some views during the consultation process, and we will engage the HK Institute of Public Accountants to clarify the issue. Dr. Kennedy Wong, Chairman. Members have asked specific questions on the re-domiciliation system. I think it is very clear and I support it. Now, just now, the Secretary mentioned the pull factors. That is how we can better attract more companies to re-domicile in Hong Kong. Well, I think there are several aspects. Our regulatory environment, our taxation discounts, and also whether local companies will be given an edge in terms of local operation, and also the prospects for local financing. Now, particularly on financing, the Secretary is managing quite a number of investment funds in Hong Kong, including the Co-Investment Fund, which has received tens of billions of funding from the Finance Committee. So will there be favorable policies favoring local enterprises, including re-domiciled businesses in Hong Kong? Or will you offer the favorable policies to just any company in the world? Now, I think you need to be discriminate in offering these favorable policies to companies. Now, in the management of investment funds, would you also favor investment funds which have re-domiciled in Hong Kong? Secretary, I think Dr. Kennedy Wong's consideration is how we can bring about more strategic businesses to re-domicile in Hong Kong. Now, in assessing investment options, we take a comprehensive perspective, including whether their business is aligned with our strategic development directions, and also job opportunities brought about by these companies, and also other considerations. Well, I can't say that these will be the prerequisites for these companies to come to invest. Now, at present, there are a lot of non-local companies registered in our company registry. They don't have an actual business in Hong Kong. So under different initiatives of the government, we want to make sure that different bureaus and departments are offering favorable policies in a cooperative manner rather than working in silo. We have been pushing for consistency. Say, for example, under the limited partnership funds regime 3 years ago, the LegCo passed this proposal. Now there are more than 600 limited partnership funds established in Hong Kong right now. So in consideration, we would consider their origins as well. So this is our broad direction, but I don't think we have to adopt it as the prerequisite for allowing companies to come. Mr. Duncan Chiu, the last person to speak. Chairman, I support the system, but I have 3 questions for the Secretary. Now, besides insurers, we have a lot of listed companies registered overseas. Now, if their businesses, they have global businesses and they have also registered in other jurisdictions. If they are allowed to keep their overseas registration, then it may incur more costs for minority shareholders. including legal fees or even clearance, because additional fees would be incurred. So for listed companies with the majority of their operations in Hong Kong, they should be encouraged to re-domicile in Hong Kong. This is something that the government should push. Now, this is an inward company re-domiciliation regime. So upon implementation of this regime, will the government consider implementing an outward company re-domiciliation regime? Will there be a timetable? Now, thirdly, there are major brand names overseas. When these companies are trying to re-domicile in Hong Kong, the brand name may be already taken here. So for these cases, how will the government facilitate their re-domiciliation in Hong Kong under the same brand name? Secretary, I will take the first two questions and then the registrar. Now, this is an inward re-domiciliation regime rather than an outward one. Well, I think that's what Mr. Duncan Chiu meant. Well, an outward re-domiciliation regime is not adopted by many places. Say, for example, Singapore doesn't have such a regime. Only New Zealand has an outward re-domiciliation regime. So after the implementation of the inward regime, we will draw reference and consider the option. And second, we encourage corporates and listed companies to make use of this re-domiciliation regime. So after becoming one of our companies, they will have to meet the requirements under the company's ordinance. Now, on whether to make this move to re-domicile in Hong Kong, I think we should leave it to the companies and the shareholders themselves. On our behalf, we will provide facilitation. Now, the third question, I will invite the registrar to give an answer. Now, about using the existing brand name, under the company's ordinance, there is not an arrangement for companies to keep the original name. And also, duplicated registration under the same name cannot be allowed. Now, the first type of companies we are intending to attract is brand new companies which are not registered in Hong Kong. The second type is non-Hong Kong companies which have already registered in Hong Kong. Now, for the second type, if these companies would like to register anew under the re-domiciliation system, we will allow them to keep the name which we have approved, as well as the original business registration number. We hope this can facilitate re-domiciliation by these companies. Secretary, a final question for you. You have answered our questions in details. So after the implementation of this scheme, what kind of industries, what kind of businesses are we trying to attract, and from what places? What companies do you think will be attracted by this re-domiciliation regime? Secretary, Chairman, during the consultation, we have learned that the insurance sector seems to be the potential sector where most companies will choose this re-domiciliation regime. There are 12 insurers registered in Bermuda, so we think they will receive our regime very warmly. On other businesses from other places which we think may be interested in the regime, well, here are some figures. Well, this is just for reference only because the decision is to be made ultimately by companies themselves. Now, for non-Hong Kong companies registered in our registry. In this month, we have some 14,000. Half of them are registered in BVI and 20% are registered in the Cayman Islands. Now, these are non-local companies registered in Hong Kong. It shows that they have a significant business link with Hong Kong. So these companies registered in BVI and the Cayman Islands may have a high chance to come to Hong Kong. There are also other companies which we are targeting, but maybe the number will be smaller.
多謝局長。
I thank the Secretary and his team for coming to our meeting. According to this paper, the government targets tabling of the bill in the first half of next year, 2024. Any views? Members? All agree? Okay. Thank you. Thank you for attending today's meeting. And then item 4 now. Implementation of the Basel III final reform package. Let's invite the administration to come in.
參加今日嘅會議嘅官員個名單呢，
Members, please refer to the attendance list for the names of officials. The list has been emailed to members. I'm not going to go through the attendance list again. But let me welcome from representatives from the Financial Services and the Treasury Bureau, as well as the Hong Kong Monetary Authority. Members, after the administration is ready, I will invite Mr. Justin To, Principal Assistant Secretary for Financial Services and the Treasury, to walk us through the paper. Thank you, Chairman. Chairman, members, well, it is a delight for me to be here together with the Hong Kong Monetary Authority to brief members on the legislative proposal on the implementation of Basel III final reform package. The Basel III was first announced in 2010 in light of the financial tsunami. The framework seeks to enhance regulatory requirements for banks. As a member jurisdiction of the BCBS, Hong Kong is committed to implementing and applying Basel III framework locally. We've also enacted local legislation to implement the relevant requirements under the framework. The Basel Committee on Banking Supervision has come up with the latest set of updates called Basel III Final Reform Package B3F. We consulted the banking sector, and after we consult this panel, we will be drawing up the legislative proposal. I will now defer to the Hong Kong Monetary Authority to brief members on details of the B3F, and then I will be happy to take questions from member. Who will start the presentation, please? Mr. Chu. Yes, I'm Mr. Darryl Ho from Hong Kong MA. I'll brief members on the Basel III Final Reform Package, B3F. I'll try to be succinct since the package contains a lot of details. If members are interested, I will go into the nitty-gritty when the floor is open. Now, background of the Basel III. Since Basel I in 1988 and Basel II in 2004, Basel III is an international regulatory standard released with enhanced requirements on capital coverage and calibration of risks. I will go through with members what calibration means in a moment. Now, having learned lessons from the global financial crisis in 2007 to 09, the objective of Basel III is to strengthen resilience of banks in the banking sector. The reforms are implemented in phases starting 2013. For earlier phases, they seek to enhance the amount and quality of capital as well as requirements on liquidity and disclosures, etc. among banks. In recent years, we have seen some events such as COVID-19 bank failures in certain countries. There is evidence that Basel III implementations have contributed to containing the impact and cushioning the impact of these events on the banking system. As for the last phase, it is about the revised capital standards, which we will go through today. Before I go into the specifics, let me first say something about the overall framework. Now, the capital requirement on banks is represented by the minimum capital ratios. In other words, we need to find out the capital base, say equity and other forms of assets. And then you will hear about the Basel III reforms on these matters in a moment. The denominator is the risk-weighted asset and RWA. That means for the assets held by the bank for the various businesses, we differentiate different risks. For low-risk assets, you have a low-risk ratio, so on and so forth, so that different weighting of risks are assigned, and they form the denominator of the minimum capital ratios, that is the RWA. The Basel III final reform package contains statements on the capital base and enhancing the quality and amount of capital. That's for the last phase. Whereas for this phase, it's about some calculation requirements, so that we can enhance the comparability of banks in terms of their risks. And for bank customers, other clients, there will be a greater degree of transparency. Hong Kong is a member jurisdiction of the Basel Committee, so we're committed to implementing the Basel III reforms in full. Earlier phases of the reforms have already been implemented through rules made by the Monetary Authority under the Banking Ordinance. In order to implement the final reform package of Basel III, we need further amendments to the banking capital rules and the banking disclosure rules. And in light of the above amendments to the rules, we also need to make consequential and related amendments to the banking liquidity rules and also the banking exposure limit rules. On to the Basel III final reform package. The key objectives are: 1, to reduce excessive variability in RWA, that is in relation to the denominator RWA in the computation of minimum capital ratios, be it the internal risk-based approach or standardized approach. Previously, we've seen a lot of variability. For example, for businesses of a similar nature with a similar kind of asset, the RWA may vary a lot. So this reform seeks to reduce excessive variability. We also want to improve comparability and transparency of banks' capital ratios. That means we impose some requirements to make the computation by different banks more comparable. There are 3 major elements. 1 is a standardized or non-model based approach. This is for the calculation of capital requirements for credit risk, market risk, and operational risk. And this approach will be revised. 2nd, about internal model-based approaches, some constraints or refinements will be put in place. The 3rd element is the new aggregate output floor. It may be hard to understand at this stage. I will give you an explanation in a moment. Now, for credit risk, most banks, credit risk accounts for most of their risk exposures. That is because the core of the bank's business is to give out loans or to hold some long-term bonds, and these are credit risks. Under the Basel III framework, there are 2 approaches. The first approach to calculating RWA for credit risks are standardized approach. The second is internal ratings-based approach, IRB. Sorry, Mr. Ho. We've all read the paper. If you're just reading out from the slides, I don't think it's necessary to do so. How about you just highlight some salient points for us? All right, thank you, Chairman. Let me brief members on the changes to the standardized approach. It will enhance risk sensitivity and reduce reliance on external credit ratings. For IRB, it will incorporate safeguards in banks' estimates of risk parameters in the use of internal models. So what is meant by safeguards? In the past, for banks to calculate the probability of a default, Basel III provides that only the probability of a default within an economic cycle should be taken into account. According to the latest model, a 10-year horizon should be adopted in computing the probability. So under the final reform package, safeguards will be put in place to prevent abuse of the internal models. For operational risks, some revisions will be put in place. In the past, we allow flexibility for banks to calculate the risk. Now we adopt a simpler approach. So in the event of some operational events, such as banks having to pay some financial penalties, this risk framework will help calculate the capital requirements for banks. Next slide on market and CVA risks. This is one of the major lessons learned in the global financial crisis. In highly complex trade exposures, the old system does not reflect the relevant risks. So for complex trading book exposures, how do we reflect the risks? First, the new standardized approach will be revamped. This is equivalent to some modeling approaches adopted by financial regulators. So you need a higher capital requirement in light of escalating market risks to address the shortcoming in the previous model. Now, as for the internal models, should they be adopted, stricter qualifying criteria will be adopted. Not everyone will be qualified to use internal models. And about credit valuation adjustment risk, some derivatives trading may be involved. That means a counterparty may be involved. So for a bank which enters into such kind of transactions, and if the credit rating of the party is lowered, or that if there is a high risk on the part of the counterparty, there may be an escalated risk for banks involved in the transactions. So the CVA risk will be revised to reflect the risk. About output floor, we talked about the minimum capital ratios and the RWA as the denominator. Just simply put, about this slide, we have the existing capital floor. After you use the modeling to calculate the RWA, you need to use a standardized approach to come up with the ratio, and that the output using the internal models, the output floor should not be over 27.5%, or rather 72.5% of the RWA to prevent abuse. I'm sorry, I need to stop you again. I need to extend the meeting by 15 minutes since we're supposed to adjourn the meeting very soon. I hope you'll finish your presentation in the next minute. All right, Chairman, we have new disclosure standards. Also, some consequential and related changes relating to large exposures framework, liquidity framework. We'll also take this opportunity to introduce CCYB, positive neutral counter-cyclical capital buffer, which can help ensure banking system has sufficient releasable buffer against system-wide and unforeseeable shocks. We don't envisage a great impact to the banking industry. This is not a major overhaul enhancing the capital requirement on banks, but rather on the calculation of risk. We have fully consulted the market. Proposed timeline, you don't need to read that out. We see that. All right, thank you.
報名
Now, these members have pressed the button to speak. We have Mr. Ronick Chan, Mr. Chen Kin-po, and Edmund Wong. So I will draw a line here, 4 minutes for each of you. Mr. Ronick Chan. Thank you, Chairman. Now, for the implementation of B3, the banking sector has been prepared for many years. I think they are all prepared, so I support the implementation of B3F. Now, 3 questions. Mr. Ho explained the implementation of B3F very clearly already, but I would like to invite him to give us the example of the triggering event. Why the original plan give more weight to capital base, but now more weight is given to risk-weighted assets in the final option? Is it because of an incident within the banking industry? Now, about the implementation timetable, the banking sector in the US has yet to announce the implementation date. However, the EU, UK, and also Singapore have announced a date later than that of ours. But these jurisdictions have a branch in Hong Kong. So these branches will be subject to the B3F requirements in Hong Kong. So for the branches of these financial institutions, how would you deal with the situation where their branches are subject to B3 but their parent companies are not? Now, there are a lot of people who say that they have no objections towards the implementation of these requirements. However, the final products would usually be more stringent than the international standard in Hong Kong. So for B3, has the HKMA introduced a condition more stringent than international standard? Mr. Ho? Thank you, Mr. Chan, for your question. Now, originally, we dealt with the denominator first, that is capital base, because that would be the easiest requirements to meet. Now, it determines the loss absorption capacity of banks in case of a turmoil. However, the risk-weighted assets denominator is much more complicated. In different countries and different banks, there are varied opinions. Now, it is technically very complicated, so it took us more time to complete phase 2 in B3. So B3 was implemented in 2 phases because of the complexity. Now, our intention is that we want to implement B3 no sooner than the 1st of January 2024. We have also made reference to the implementation timetable of other jurisdictions. Now, many of our banks are from Europe, the US, as well as the mainland. We need to refer to the implementation timetable of their respective origin countries to determine our implementation date to reduce inconvenience to the banks. Now, on whether we are adopting a more stringent standard than the international standard, as a usual practice, we follow the international standard, and we have consulted the trade adequately. There have been 3 rounds of consultation with the trade. Now, we are confident that our proposal has reflected the views of the industry. Mr. Chen Kin-po. Thank you, Chairman. Now, this is an international requirement. In recent years, the international regulators have been adding to our regulatory cost every few years. Now, besides the compliance cost, you are also affecting business because these additional requirements would affect the business environment and make the operating environment harsher. So we know they will keep adding requirements. So is it possible for the HKMA to relax the old requirements a bit to make things easier for banks? Now the banks are making less and less profits every year, so we will not need the HKMA anymore because there will be no banks in Hong Kong. So compliance cost is a cost, so don't always think about adding new requirements. You have to review the old requirements. Since there are new requirements, you can think about revoking the old ones, including reporting. There should be a comprehensive review. Regulation is very important, but equally important is promoting the development of the banking industry and the insurance industry. Now, the insurance industry is better because under the newer insurance ordinance, besides regulation, the insurance authority is also responsible for promoting the development of the industry. That's not just the case for HKMA, so I hope you can take this as your mission as well. Now, I like your timetable. Implementation no sooner than 2024, so we shouldn't implement it sooner than others. That's right. Now, Singapore is quite flippant. It announced a timetable between the 1st of July 2024 and the 1st of January 2025. In any event, we can't implement this sooner than Singapore. And at least we have to wait until the EU has implemented it. They may change their mind if anything happens, and then Singapore may also change their mind as well. So you have to monitor our competitors closely, otherwise we will lose out to them. Mr. To, from a policy perspective, we have allowed for flexibility in the implementation timetable. Like you said, we have a lot of international banks in Hong Kong, so the HKMA has been monitoring the progress of implementation of B3 in other jurisdictions and also the preparedness of our local banking industry. At this stage, we want to prepare the legislative framework first, and then we will consider the implementation timetable of other places before we launch the requirements. Rest assured, we will keep in touch with the banking sector as well as the insurance trade. Now, about the real impact of B3F on the banking industry, may I invite the HKMA to supplement? Thank you, Mr. Chan, for your questions. Now, there are international standards now, but before they came about, banks faced diversified regulatory standards in different places, so there was significant risk of shifting businesses to jurisdictions with lesser regulation. So that's why Basel 1, 2, and 3 came about. It may lead to regulatory arbitrage. Banks may choose the jurisdiction with the most lenient regulation to operate. Well, when adding new requirements, we would make obsolete old requirements on, say, disclosure of risks. Now, for banks with a more simple operation model, we have proportionality arrangements for them. For banks with a more simple business, they would be given a more lenient regulation. Mr. Edmund Wong, thank you, Chairman. Now, B3 is an international requirement. We can't opt out. And like Mr. Chan Kin-po said, it has a real impact on banks and other financial sector stakeholders. But we have to ensure that SMEs can survive. As is, the situation is very difficult for them. Last week, I conducted a seminar, and several hundred people from the trade took part, and they told us during the pandemic, banks were unwilling to lend credits to SMEs. Now, with the B3 on the horizon, everything will be even grimmer. Now, this is something we have to implement, but how we can help SMEs and other businesses to cope with them. Mr. Justin To. Now, on the impact on the banking industry and other sectors, like Mr. Darry Ho said, B3 is about enhancing the transparency of capital ratio of banks. Now, our requirement is already much higher than the international standards. So even with B3 implemented, the liquidity ratio and capital ratio of banks would not be jeopardized to an extent that its business is affected. Now, during the pandemic, when things were harsh, the government has been working with the HKMA to extend payments holidays for SMEs, and when necessary, we will work with the HKMA to roll out more facilitation measures. Chairman, if I may, on the impact of B3 on SMEs, well, this is a commonly debated topic in the consultation process. Now, under the standardized methodology, SMEs would enjoy a more favorable treatment than larger businesses. That's the case for other places as well. Thank you. Now, Basel III has reflected the HKMA's tendency to implement standards even in advance of the US and the UK. The US hasn't announced a timetable yet. For the UK and the EU, they will do it in 2025. Even for Singapore, our keen competitor, they announced a date between 1st of July 2024 and the 1st of January 2025. I don't agree when you said that banks of different scales agree to the implementation of B3. Banks consider that it would undermine their flexibility. That's what I gathered from my meetings with the trade. Now, to you, they have nothing to say because they can't change your mind. Over the past several years, I've heard from many people that banks were a lot less willing to help SMEs. The banks would tell their clients that this is how the rules are, as set by the HKMA, and there's nothing they can do. Now, the robustness of a regulatory regime is a must, yes, but I don't think we have to strive to be the first one to implement it. We have to maintain flexibility for the banking industry. Now, I'm not someone who has a stake in the banking industry, but I have heard a lot of similar cases. When there is a breach, the fine would be very hefty, and the money collected would be used on enhancing the regulatory regime. The HKMA would be keeping a much closer eye on rule breaches. So this is the views of the market. I am just simply conveying their views. Mr. Ho, you said the banking industry does not have any objection. Well, I beg to differ. Banks of various scales have objected to it. I won't name them. Of course, to be fair, the HKMA has been very helpful in the past 2 years. But I really hope you can keep flexibility in the market. Well, you should be helping the banking industry without the industry backing you. We have to maintain our competitiveness as an international financial center. Thank you. That is just my personal view. Now, time is running short. I want to extend the meeting by another 5 minutes. If there are no views, then
當局呢就係政府
I read from the paper that the administration intends to implement the B3F no earlier than the 1st of January 2024. But I must say that I don't see any other jurisdiction implementing the package earlier than the 1st of January 2024. I urge the administration to rethink whether it is absolutely necessary to implement it starting the 1st of January, because for EU it's 2025, and for the United States, which often point fingers at other jurisdictions for non-compliance, I don't see the US complying with the standards at the very first instance. So must we hurry ourselves? Just give it a thought. Please note our comments. Your target is to implement the B3F on a date no earlier than the 1st of January 2024. I've made my views clear, so as other members. And then the relevant legislative amendment proposals will be submitted to the Legislative Council for negative vetting. Right, I've reflected members' views on their behalf. Any other comments? If not, then your presentation is noted. We will be receiving papers and the implementation timetable from you. I really hope that the Basel III B3F will not impact on our status as an international financial center. I see some heads shaking here, but I think we're being overly aggressive comparing to the Western countries. So do give it a thought and see whether you can allow for some wiggle room, because like the chief executive said, it's time for us to trawl for talents and enterprises. I'm wondering whether Basel III is going to affect some enterprises. Will they encounter difficulty in opening bank accounts? For example, we do need to take a microscopic view on the matter. Right, members, support this proposal, right? Thank you. That's all for this item. Next, AOB. Nothing under AOB. Any suggestions from members? No? All right, so meeting's adjourned.